Hi, and welcome back to my channel. For today, I'm up just about $20. As you can see, as soon as the market closed, or right before market close, I had this big fall off. Both the jump this morning and that big fall off had to do with Bitcoin. If we go ahead and look down here, we can see that it kind of stabilized after a big jump. If you go ahead and look at that, I have about 5.7% of a Bitcoin right now, proportionally. So I am continuing to buy Bitcoin as much as I can. Portfolio is up to $3,096, so I'm down about $54 all time. Invested another $50 this week. Will be slowing down, not investing for a couple weeks. As a college student getting closer to finals, I'm not working the next couple weeks. Not a huge deal, but I am planning on investing probably another $50 before the end of the year, which would make my total investments $3,200 for the year, and then picking up investing again in January. So hopefully I will have some more content coming soon, some different content to kind of bridge that gap. Definitely move my channel to investing in general, not so much in terms of stocks. I have a couple ideas, possibly talking about the FIRE movement, what my thoughts are, some calculations that I've done on that. So let me know in the comments if you'd like to see that. But again, going back to today, we can see in the last hour, not a whole lot of movement. On the day, up $20 again, which is pretty good. On the week, I was down almost every day, and actually every day until today. If we go ahead and look at the last month, this is where it's more interesting. I've had kind of these peaks up and down. The vast majority of that has to do with Bitcoin, based on the calculations that I've done. If we go ahead and look at the all-time graph here, like I said, down about $54. If I check, I believe I'm down like 165 with Bitcoin. Which, if we do the simple math on that, we know that means my stocks are up over $100 on the year. When you consider that I only have about $2,500, $2,550 invested in stocks and the rest is in Bitcoin, when I did the math on that, it's over a 4% return that I've had on my stocks, which again doesn't sound great until you consider that the vast majority of the money that I do have invested has been within the last couple months, meaning that that money hasn't had a full year to grow. So I am very happy with that. So we'll go ahead and start today with KeyBank because this was a pretty interesting one. Clearly one of my smallest holdings, but at the same time, something happened at the end of trading today after market that wiped out all of the gains from today. I'm not sure what that's about or what happened. I haven't heard any news on that. But again, this is one of my newest holdings, down 37 cents on that, not concerned at all. I think it's a good one in the long run, pays a decent dividend. And I'm looking to increase that holding if at all possible because it's affordable, pays a dividend, and looks good in the long run. Now, again, I always talk SPHD and VTI are basically my two indicators. So SPHD for the S&P 500 and VTI for the NASDAQ as a whole. But if we go ahead and look at this, we can see in the last month it has been a little bit weird, a little funky. Since we saw those all-time highs in the stock market last month, especially with the S&P 500. It has been up and down over the past couple months. Not terribly concerned about that. I do like looking at this 5-year graph because we can see that there has been this up and down within the last couple of years where we're reaching these peaks, especially with SPHD, and kind of flattening out. That being said, the monthly dividend that this pays is great because I have been investing in this every single month. My total dividend has gone up nearly every month, and I am looking forward to that in the future. I always think that's worth noting. VTI, very similar movement, but because this is the total stock market ETF, and because it pays a lower dividend, and a quarterly dividend instead of a monthly dividend, we do see a little bit more growth on that. And even when we look in the past 5 years, the same general trends, but that being said, it does move, I would say, more drastically up and down a little bit more. And that's, again, because of the dividends being lower. So as we can see on this total return of $11, I believe I've only received one dividend payment on that so far. So as we can see, September 19th, paid $1.40, which means I am looking at a dividend for this one in a couple weeks. I'd have to double check. I'm not sure if they've declared what that dividend is going to be yet. But the way that I see it, up $10, almost $11 on that. So not terribly concerned about it at all. And then, as we can see, Coca-Cola and Agilent have had some pretty interesting things going on today. They were both up. for the day. As soon as trading ended in the after hours, they were back down to where they started, but popped back right up. I'm not sure if that has to do with anything with Robinhood or with those stocks specifically. Another one that I want to focus on is VEREIT. I did go ahead and buy a couple more shares of this last week. So if we go ahead and look down here, we can see on the 29th, I bought 4 shares at $9.80 a piece. This one does pay a dividend of almost 6%. Last paid in October, so we're looking into early next year for that next dividend. But I have talked about how high this dividend is. Like I said, almost 6%. So 13.75 cents per share. It is a constant dividend. They haven't changed it at all since 2013. I think I've gone and talked about this in the past where this is a company that reorganized after some accounting errors and things that had gone wrong. But all the indicators point that this is a good REIT to have in your portfolio. As my portfolio grows, I am very interested in spreading my wings out and basically trying to balance things out so that it's not too risky, diversifying the portfolio where I can. The thing that I really like here is that the earnings have been fairly consistent. So even if this stock isn't moving a whole lot, up and down that almost 6% dividend that it is paying per year is going to work out just fine for me. I've talked about it before. Very high buy rating here from Robinhood, which is always a good sign to see. 961, so I'm down $2 on that all time. Again, not great. But when we go ahead and consider that in early January, I'm looking at a dividend, 12 shares at 13.75. I'm looking at recouping those gains almost immediately based on that dividend plus the 40 plus cents that I earned the last time. So over the last month, down a little bit. We'll go ahead and take a look at the year. Has flattened out over the last 5 years. As you can see, like I said, they reorganized. And since this was relisted, it's not up a ton, but the 6% annual dividend, I think, is the real key here. And that's why I'm continuing to buy it. Along with the fact that it's under $10 a share right now, which is awesome for the size of my portfolio and what I'm trying to do. Then I would like to talk about Charles Schwab. I talked about them a couple weeks ago in my last video and why this stock has risen so much, up 13%. Hindsight's 2020. It really would have been nice to invest more heavily in Charles Schwab, and especially Microsoft, which I've talked about quite a bit. The reason that this is so important is, again, this huge gain had to do with the news that they're going to be buying TD Ameritrade for an estimated $26 billion. This is huge for Charles Schwab and really the financial industry as a whole. I think only time will tell whether this is a good thing or a bad thing, what the total implications of this are. That being said, I have an article pulled up about Charles Schwab because they have made the decision after the merger to move their headquarters from San Francisco out to Texas. TD Ameritrade will be moving their headquarters from Nebraska, from Omaha, down to Texas as well. Now, there's a couple reasons why this is particularly interesting. This article covers the fact that companies are really squeezed in San Francisco. And just like the price of housing out there, everything has become extremely expensive. But here, this is the real key that they were talking about. They'll be based in the Dallas-Fort Worth area. Neither company are currently based out of the Dallas-Fort Worth area right now, but they already have large offices in that area. But this is what I find particularly interesting. They say it's the latest corporate titan to announce a move as the cost of doing business in the Bay Area continues to rise and rise. While this is true, that a lot of it has to do with increasing costs in the Bay Area, I think it has to do with taxes. So regardless of which way you lean politically, I think it's important to note a couple of things. So the first is that the corporate tax rate, or increased state tax rate, in California is about 8%. That increased tax rate in Nebraska is about 7%, and Texas does not have any extra taxes for these corporations. Additionally, Texas does not have any state income tax, and people have talked about this for decades. It's huge for people looking to move there because the top individual tax rate in the state of California is over 12%. And like I said before, it doesn't matter which side of the aisle you lean politically. This is important to note. It's a huge reason for people to move to these states, and I think it is important to understand why these companies are moving. I think it's important to note that Texas is growing much faster than almost any state in the United States, and this has to do with low taxes. It has to do with the state being corporation friendly, that they want these businesses to come in and succeed. While they may not be receiving the tax on the front end, it's almost certain that they're going to receive money on the back end because people are moving in. They're spending money there. I talked about it in my last video. These two companies merging have $5 trillion in assets. That's enormous. And so when they're considering moving their headquarters, now it's a certainty, to the Dallas-Fort Worth area, this is enormous. And we know the reason for this, and I think people need to take note of it and understand how big this really is. It's going to be interesting, like I said, to see how this turns out in the long run, because it is such a large corporation now. But if we see here, they say 7,000 employees is what they're projecting for this headquarters in Fort Worth. That's enormous. I mean, there's no other way around it. It is objectively enormous. That is a lot of people. That's a lot of money being moved in. But I think that it's a good teaching lesson, especially as a college student. I think we don't talk enough about taxes and what those implications are for businesses. So not a super interesting video this week, but thank you for tuning in. Like I said, on the year, we are down a little bit, but my stocks have performed well. So go ahead and let me know what you think of doing some additional content, some different content, what you think. As always, please like and subscribe. The channel is growing slowly but surely, and I appreciate you watching. Thank you.